All right. Good morning, guys. Hope you all had a great start of your weekend. Welcome to a forecast, and it's a forecast. And again, I have stuff to do on Monday, so that's why I'm doing it right now. Um, and yeah, unfortunately, ideally, I would like to do my forecast in the weekend and then do a pre-market analysis on Monday to confirm my analysis during the weekend, but we can't do that right now, so we just work with this. And so far so good. So this is the 1 hour, quickly checking out the 4 hour. Great, same candles. So do there. Just keep that. So, so um while this is still a lower time frame, we're gonna zoom out and check out what the monthly looks like. All right, so on the monthly time frame, we have this key level. This is a key level. Why is this a key level? Well, if you go to DXY, around the same time we tapped into that 100 level, which is a key level on DXY. So around the same time we tapped into EU, and therefore it is a key level. That's complete bullshit. But what makes it a key level is that it's a huge support and resistance area where actually we tapped in 79, 97, bruh, 79, 1979, and we dropped from there all the way down to 85, and then only back in 87 we got back there, and then we can see that 91 we got up there, 93 we got back to that level, we went way around that same area, we came back at 89, then boom, 2000 euro came in. We got back there, little retest, so the level's actually a little bit lower. It's as I always say, it's not just one line or one area. They say one line, yeah, it's an area. So if you look at it, it's kind of the between 110 and 112.50, 114, 13, ideally 112.50 is what I like to use. So that would be right there. So inside that is that's the actually key zone, so to say. But we tapped in there. What we can see now, 2023, 2024, we're around that area and we're rejecting this area. So we are in a potential resistance area where we can either move further down, but as we know, uh, we are expecting higher pricing. I'm expecting dollar weakness. So yeah, and if you use trend lines or trends, I don't know if this is true, but this is literally something I see right now. Got a high, we got a low, got a higher low, then we got a higher high. Let's do that again and pretend like I'm a proper trader instead of someone that doesn't even know how to mark out structure. So we got a low, a high, a higher low. Sorry, higher high, a higher low, a higher high. Now look at that. Now we have higher low and a potential higher high. Dollar weakness. And that makes sense, because we were always printing dollars, dollars, dollars. Literally, well, I don't know if it was Jerome Powell or someone else. He literally said, there's no problem, we will just print more. And that is the whole problem, that they're just printing more and more and more, creating more debt, and it's just shit. So dollar weakness in long term. Um, then if you look at this from a more of a smart money kind of perspective, ooh, that's even better than I hoped, is that we got below that 2022 level there, kind of the final internal range liquidity, so to speak. We took that out and we came into this demand zone, and now we can expect higher pricing. So, yep, That's what I'm looking at for now. And in a long term, so this took us from 2021-ish, 20,000 or 2000 to 28, where the first so-called crisis happened. So if we pull this across, it was around the same length. Geez, it was around the same length that we reached this low up to this high. So now what we can expect is probably something like this. If this is the low, of course. And we're gonna reach high, bro. We're gonna reach high, so slightly lower. I think now it's around the same length as this one. Yeah, kind of. At 75 levels, beautiful. This was a nice 160. This was a nice 140, 41. This was a nice 112. So yeah, in 2030, I'm gonna make this prediction right now. Around 2030, EU, or we will have another crisis, and EU will crash. And well, not crash, but there will be something that will cause the dollar to gain strength if we move up, of course, from the only if we move up from this point, of course. If we come down further, then we've got 2.8. But if you move up from this point, I'm seeing EU crash at least from 175 to 130 again, as we did 140 or 160 to below 1. So that's actually 60 drop. So 75, if we get a deep retracement, we can actually drop G's to 110-ish, 120, 110, which makes either we drop back into the key level or into this key level there. Right there. See? Also a nice support resistance on. But yeah, so that's what I'm looking at for the very, very, very long term. Nice, really nice. Then looking at the weekly, actually, let's look at last month or last quarter where we went up, and then now I'm expecting a little retracement. Already we get down here. I feel like we can retrace below here, and price might want to retrace below there, although very slow as of now. But why? Well, as we know, we have this area up here, and as we expect dollar weakness, so if we zoom out, there we go. Damn, that's a huge spike. A high, a low, a lower high, a lower low, a lower high into that demand zone, a supply zone, and potentially lower lows. But I think that we first need to reach up here before we reach further down. Sorry for my nose, by the way, I'm sick. Then, with that in mind, and the DXY chart in mind, that we first want to reach a little bit higher before we reach lower, we look at last week, and last week was actually a liquidity grab, or it looks like it, where we just about took the lows, and look how we closed. Like, it could either be an inducement candle, this doji candle, or this is literally the liquidity grab. And now we can see some momentum, and we impulse to the upside into that key level. Because on EU, we have also higher pricing. And with the idea that I explained, on the long term, this might be your move for this year, actually, from this low or from around this area up to 2025 up here. But who knows, who knows, who knows? So let's see. Because 2023 was kind of ranging. 2022 was down. So 2023 will probably was ranging. 2024 might be going in a direction. Whether it's down here or up there, we don't know, but we'll see, we'll see, we'll see. But that weekly candles, we can see it took 3 candles to get to the upside, although this is a nice turnaround candle. We got 1, 2, 3, 4, 5, 6 candles to break below here, which says a lot about price behavior. If we zoom in, what can we see? Price behavior is indeed quite slow. We don't see any strong impulses, indicating that this is a strong bearish break, and that's why I still look for higher pricing. Coming into what I want to see next week is that we can see, actually, let's do it on the 1 hour. We took out these highs. That was so predictable. Took out this high, took out the low. So liquidity from the upside taken, sell side liquidity taken, and then targeting the bull side liquidity, buy side, sorry. We can actually see that we have a nice bullish break over here, sorry, over there, and we have a nice range to work with. So we got a high, previous daily highs, we got previous daily lows. We haven't, sorry for my nose. We have an untapped supply zone, or sorry, demand zone, but we don't need it right now. Why? Because we are working with this new range. What can we see inside this new range? We can see a nice little liquidity sweep. And with that liquidity sweep comes a nice little demand zone. And with that demand zone, we can see that we have some internal range liquidity. So we already got 3 confluences. We got a sweep. We got a or POI or demand zone. We got liquidity. Now, what do we want to see? We want to see that we reach that 50% of that zone, ideally. Demand zone. And from there, we can look for longs. We can already see that prices building up nice liquidity form of this trend line. So that's also on our site. And overall, it just seems to be a very valid move. Although I wouldn't target these highs instantly. I would like start to target this high. Start with targeting this high, sorry. And from there, this nice, I like it. From there, reach potentially into this huge gap. And then we see again, we reevaluate, we see how price reacts, what price does, and go from there. But for now, for next week, I'm looking into price retracing into this and then continuing to the upside and move from there. So my forecast on EU for next week is a down move and then a continuation to the upside. Yes, yes, yes. Then forecast for GU. And let's look at the monthly again. It's actually because GU is different. Although overall on all the majors and especially of course because we're talking about the dollar related majors, we can see that we have high, low, a lower high, a lower low, a lower high, and a lower low, lining that up with EU, where we want to see a bullish break. On GU, we want to see at least high pricing. Why? Because we broke below here. And now we want to move to the upside, reach premium pricing before we move further down. So in the long term, EU and GU are looking at higher pricing. Second thing that's on our side is that this break, or maybe not on our side, because we might get another stronger break. But what is on our side is that it's just a slight break and price moves up rapidly. So we might see higher pricing coming very soon, as we want to move up here. 2025, we might be up here already. Yeah, that's my high time frame for GU. Then weekly wise, bit the same as EU. It is actually the same. And the weekly candle that pushed it downside, doji candle closure. We can instantly go to the 4 hour. Don't need to watch the daily. And that's what I said. I said like, okay, we have that sweep there. Although we didn't reach back into it yet, there's so much liquidity here that been taken. There's so much liquidity building up to the upside there. So it's a bit of both. And ideally, after this low is taken, I want to see price taking this highs. Whether that's gonna happen or not, we don't know. And this is because we don't know, we work with our lower ranges and our lower ranges and lower structures, lower time frame structures. I mean, with that is that we have that's what we have over here. And for now, we have a bearish break. And we want to see price reach back into premium pricing. We got nice liquidity building up here to the upside. This is actually weekly high, or is it from just from last week? So this is our weekly high that will be taken out soon. What we can see is that we have a high, low, bullish break, return to discount pricing, where we took out that daily low there. And then we broke above here just about. So for me, I will either look for shorts coming on into next week from this area, or I want to look for longs from, you have a low, a high, that's still valid this area, and probably on the 15, there it is. We've got this sweep there. We've got this high that led to that low over there. And we've got nice, if we go to the 5 minutes, clearly visible internal range liquidity for that move. And that lines up GU quite nicely with EU. So coming into next week, I'm looking for longs from these areas into these highs. Depending on how price opens, we might actually Monday take out these highs, and then I will be looking for shorts, for quick shorts, so 1 to 4s only, not targeting these lows yet. And see what happens from there. And that's pretty much the same for EU, where I want to see premium pricing first, and we might get lower. And if we impulse above here, then I'm gonna look for longs to hold, so to say. Then the XY, straightforward, same thing. I want to see price get below there. We just took out these highs though. I don't need to do that there. If you go to the 1 hour on the XY, slightly different though, because we got more liquidity building up here. No bearish breaks yet, but coming into next week, we want to see the bearish break nearly there, as we are building up equals, building up liquidity there. And although the XY is a bit more tricky with the liquidity to the upside, I think that EU might lead now and take the XY with it. So higher pricing on EU, lower pricing on the XY. Again, this forecast might be completely wrong. The thing is, if it is completely wrong, we will see instantly why it's wrong, and we can instantly change our bias. It's 1 second. Where's my thick thingy? Anyway, so if that happens, we just instantly know what to do, right? So it doesn't really matter. We just move along with the market, but just giving myself an idea, a potential scenario that could play out, so I can anticipate on that first, because that's what I think is most likely to happen first, and that's what I use. And then coming into the week, we adjust based on price behavior, price action, everything we got there. We can clean this up now. We got a nice Tuesday, previous weekly low there. Wednesday, Thursday, Friday, yeah. It's this week. Previous week lows. And then Monday opened there. So this is I've got previous weekly highs. Wait, this one with the bottom. Nice previous weekly highs up there. GU. Like that. It can go. I like to keep that one actually. This one there. But Monday, Friday, Monday. Same thing. And previous weekly lows. So yeah, that's my forecast. Let's see what happens, guys. I don't know yet. I'm a bit sick, so well, fuck that. I'm not weak. I'm sick, not weak. So after this, I will do some reading, forecast. It's just done. Got some work to do. Gotta go to the barber. Got some more work to do. Got some sports to do. So, oops. So I wish you all a good weekend. Enjoy and catch you guys on Monday. Peace out.